Hi, this is Nathaniel Pulsifer with Wholesale Income Advantage, and I wanted to take a minute to highlight a specific case for you that's just a fabulous deal available right now. This case may not be available when you see this video, but this one really illustrates how the wholesale income program works and how it can just beat the pants off of a regular 60-40 stock and bond allocation in your portfolio. So let's take a look at the computer and I'll show you exactly what I'm talking about.
So in recent videos, I've done quite a few wholesale income advantage analysis studies of different longer-term income stream. We did a 30-year and a 38-year income stream. I wanted to look at a little bit shorter one right now because, for whatever reason, some investors want shorter income streams. They may have other income coming in. They may be older. So I'm going to look at a 15-year case. And this might be appropriate for somebody who's 75 years old or so who wants fixed income for a period of time but doesn't really want to extend it out for a long time. The math, well, frankly, it still works. It works every single time. So let's take a look at this particular case. I've got a MetLife 15-year income stream right here. You can pick it from the inventory. You can see the illustration of it. Pull the payments table. The payments table will show you all of the dates of the payment. This particular one does not have a cost of living increase. It's a fixed flat income stream. So 3637 per month for just over 15 years. The schedule is right here, downloadable right from the website. But let's take a look at what this looks like using our apples to apples comparison to a 60-40 stock bond allocation. So I've got this one on the clipboard, and I'm going to go over to our little wholesale income calculator here, which is available for download on the website. I'm just going to put it there for ease of reference. So let's assume you're starting here. You're looking at you've got $1 million, and you're looking for a fixed income as a way of getting out of the stock market, the volatility of the market. You know, if you're in the bond market right now, you've been killed. Bond market pricing is down 40% over the last, I want to say, 18 months. So bonds and price, the yield of bonds go up, the value of them go down. In my world, the same thing happens. My yields have gone up, my prices have come down. So right now is an awesome time to be buying fixed income. Let's put it on this illustration here. So you got $1 million portfolio, and you're going to look at taking 3.637 a month out of it. That's a 4.3% withdrawal rate. And as we've done in other videos, I'm going to use this Monte Carlo visualization tool, and I'm going to use these Vanguard ETFs as proxies for the market. This VFINX is like a 500, like an S&P 500 ETF, tracks the S&P 500 with super low expense ratio, and same with VBTIX, tracks the bond market. So we're going to go to this tool, and we're going to start with $1 million, and we're going to withdraw 3.637. So we're going to say 3.637 per month. Now, this is a 15-year illustration. We are not going to adjust with inflation on this one because the income stream is a flat income stream. So just to keep the comparison apples to apples, you do realize and you know that the buying power of this 3637 will go down over time because inflation is a real factor. But this is a flat income stream. So to keep all the illustration even and apples to apples, we're just not going to model inflation because I don't want the income to go up because this particular income stream is flat. So let's just say we are going to use VFINX and VBTIX. VBTIX was the Vanguard bond market. 60-40, typical down the middle Wall Street kind of thing. A little over 4% withdrawal rate on your portfolio. Somebody would be glad to charge you a point a year for managing your assets to do just this. At the end of 15 years, this is a Monte Carlo illustration that shows thousands of potential outcomes given historical time patterns. And on average, this tool is illustrating the fact that you'd end up with 1.77 million at the end, just in the middle of the road. Could be as low as 780, as high as 3.2 or 3.3. But let's use this middle of the road number, okay? And we've done this in other videos as well. Now, this gives you the income, the same income. But what if instead of using your stock portfolio to buy that income or to withdraw that monthly amount, what if you use this MetLife contract? So you peeled out 470,000, 613 to be exact, and you had 529 left over. So 529 is obviously less than $1 million when you started with. But remember, you've bought safety. You've bought your income. So you don't need withdrawals. We're going to run on the same 15 years, the same no inflation. And you've bought your safe allocation, so you don't need to buy the bond allocation here in the markets. You can put it all in the growth or the S&P 500. Let it run, give it time. So instead of having the bond allocation, we can just have it all in stocks because you've bought your safe money allocation by buying the MetLife income stream. Now, when you run the simulation on that lower principal investment amount, on the high end, you're looking at 5.3. On the low end, 1 million of money left over after 15 years. So remember, you started with 529,000. So now let's check that out. Wow. Started with 470 investment and 529 left over in the markets, ended with 2.562. That's a 44% increase using the wholesale income advantage technique here. I've said it over and over again. This works. It works every single time. Your mileage will vary depending on what your preferences are for market investments, what you choose. I'm not a stock picker. I'm not recommending any investment in the stock market. I work with fixed income from wholesale income contracts. And this whole illustration is just meant to put it in context. What you do with your dollars is your business. But if you compare going this way versus that way, this way being your typical Wall Street 60-40 stock bond allocation versus the wholesale income contract and investing the difference, this works, and it's pretty hard to refute. So my name is Nathaniel, again, from Wholesale Income. I'd love to work with you on your specific situation to investigate if this makes sense for you. Thanks so much. Talk to you soon.